90% of the bad faith claim lawsuits brought against insurance companies across the United States in quarter four of 2022, 90% of those lawsuits were brought in Florida.
Unbelievable. That's an unbelievable statistic.
90%. So we're just fraudsters. That's just embarrassing. People, be better, for God's sakes. This episode brought to you by Suites at Madison. Meeting and conference rooms for rent by the hour, week, month, or year. Suites at Madison, where business gets done. Check them out at www.downtowntampaoffice.com. Now, on to the show.
You are listening to the Invest Florida Real Estate Show, covering topics in lending, buy and sell strategies, property management, hot markets, and tips and tools to guide you along the way on your path to real estate success. You want Florida investment real estate talk? You have come to the right place. And now, our hosts, Eric Odom and Stephen Silverman.
Hello, and welcome to another episode of the Invest Florida Real Estate Show. This is your co-host, Eric Odom, along with Stephen Silverman. Stephen.
Okay, I'm here.
I mean, I've only been your partner for like 11 years. I still can't get your name right.
You know, people call me Hey You. I respond to much worse things, so that's fine.
Insurance in this state is a problem. We're going to talk about that today, Stephen.
So it's a huge problem because we're sitting here as real estate brokers and property managers, and we're seeing what our clients are faced with. And we have to get to understand what's causing this, and then we have to fix it. Is it just happening in Florida? I mean, we can't live in a little isolated community. What's happening in the rest of the country? And if the rest of the country isn't having these problems, then what do we do to fix it? We have to take action.
Right. And we're going to talk about this with our guest today. And when you talk to the politicians in the state, they're going to tell you that this is either the other party issue or it's some other issue. It's hurricanes. And hurricanes are contributing to this rise, but it's really not the main reason. A lot of it can be handled by legislation.
Yeah, it's really going to be an interesting discussion because, and as you rightly said, it's not about politics. If you're a Republican and your Republican member of government is not taking action to correct the situation, elect another member, a Republican, who does take action. But we have to get people who understand there's something amiss going on here.
Yeah, there's an issue, and it can be corrected legislatively. We're going to talk about it. And we're going to talk about like what it's causing, because if you haven't gotten an increase or your insurance bill for this year, look out. And if you think you got your insurance bill doubled last year and you're not going to get hit again, guess what? It's going to double again. And my insurance has gone up over the past 3 years on my home. It's up about 5 times. It's insane. And we're getting 1 year increases on some of our properties that we manage of 300%. It really is a massive problem. And it's going to be causing economic hardship in this state if it's not addressed. We're starting to see with some of our tenants that were struggling month to month be able to pay the bills. And it's taxes and insurance. Those two things, the property taxes and insurance, are just crippling them.
But not only the tenants, look at the landlords. I mean, you know, a lot of the tenants are protected. You look at some of the leases, they've got 3% escalations, or sometimes they'll have a cap on the CAM escalation. And then you see that these rates going up like doubling or tripling, and then the landlords take it on the nose.
Yeah, whoever's not covered, most retail properties, industrial properties, and office properties, there's something called a pass-through with common area maintenance that those items get passed through. Residential tenants only tend to have 1 year leases. So what happens is the next time the lease gets renewed, your rent gets bumped by 15 or 20% or whatever it might be to cover the cost of these insurance increases. So everybody's paying for it. Doesn't matter whether you're a tenant, your landlord, whatever it is, you're paying for it. So we're going to talk about this. We're going to talk about why and what the reasons are for it, and that we can actually do something about it. It's just going to take some constructive effort from folks in the community to let their political leaders know that it's not acceptable. Stephen, got a review from Adam from Home Equity Partner. Adam says, I recently listened to the episode featuring Dr. Chow Ong on the Invest Florida show, and I was truly inspired. Dr. Ong's expertise in corporate housing arbitrage is impressive. I learned that this strategy combines long-term rentals with Airbnb, allowing for rapid cash flow without requiring substantial capital. I appreciate the insights he shared about using other people's properties and finding the right tenants. Adam, I can't tell you how much we appreciate that and how much that actually helps you. We talk about this every show. This is a show that requires a lot of effort for us to get guests. And when there's reviews that are left like that, the people see that they're listening and they're getting something out of it, then they're more likely to want to come on the show. So, Adam, really appreciate you investing some time and spending some time with us and completing that review. If you've not done so already, please do that because it is important. Right, Stephen?
It's absolutely important. And we do get some really incredible guests, and we learn a lot just being on it, and so does our audience. So the reviews help us all. Please just send reviews because the guests pay attention to them before they come on the show.
Absolutely. Stephen, are there any other housekeeping items we have before we roll into our guest?
No, let's roll on to insurance. Today we have with us Kelvin Roberts. Kelvin is a nationally licensed commercial insurance broker and the principal of Falcon Insurance Agency of Michigan, a boutique insurance brokerage specializing in multifamily commercial real estate and mergers and acquisition, pre-acquisition, and insurance guidance. Kelvin has been active in the field since he was 19 years old and brings a wealth of knowledge and expertise to the table. He serves real estate investors throughout the United States. Kelvin is a trusted resource for creative real estate risk management and insurance placement. Kelvin, welcome to the Invest Florida show.
Thank you very much for having me, Stephen. It's my pleasure to speak with yourself and Eric today.
Calvin, really appreciate your time. You know, insurance is one of those things in the state of Florida that is, in the last couple of years, it's been a problem for a long time. My entire life it's been a problem. But in the last 2 to 3 years, it's become a huge problem. We're seeing a lot of increases, but I'm across the board, and I'm not talking small increases, doubling, tripling of the cost. Is that what the rest of the country is seeing as well?
So the rest of the country is definitely feeling the pain within property insurance. It's been, how do I phrase this? It's been an exciting time to be a property insurance broker. We're seeing big, established, conventional players pulling out of real estate left and right. You know, just earlier this month, Nationwide announced on June 30th, they are completely pausing the habitational, multifamily insurance segment on new business for at least the foreseeable future, the rest of the year at minimum. It's unlike anything I've experienced in my almost 8 years.
So tell us about Florida as it compares to the other states. I mean, what are you seeing? Is Florida worse? Is it better? Is it about the same? What's going on there?
So Florida, over the last year, if you haven't gotten a 100% price increase year over year, you've gotten a pretty good deal. It's scary, is how I want to phrase that. Florida has really 6 or 7 things all working against it in tandem. The first being the thought on everyone's mind. It's a low-lying peninsula in a hurricane-prone part of the planet. You get those large catastrophic loss events, hurricanes, hailstorms, windstorms.
So I'm sorry to have interrupted you there, but I think it's an important point. You say there's going to be 7 things that I want to touch on, all 7 of them. But it seems when we talk about the state of Florida, the most common thing people say is that, well, we're full of hurricanes. We have these very expensive hurricanes that blow through, and that's what's causing the damage. And it's contributory, correct, Calvin?
Correct.
But it's a lot deeper than that. So why don't you cover that point first? Because some of it's political.
Absolutely. So in Florida, there's a litany of factors that are all coming together and creating a perfect storm that is really beginning to disrupt the property insurance marketplace within this state specifically. The first, on everyone's mind is the presence of hurricanes and other large catastrophic loss events like it. Florida is highly susceptible to hurricanes, being that it's a low-lying peninsula in a hurricane-prone part of the planet. But that's not the only factor. I mean, you look at Louisiana, Alabama, the Carolinas, Texas. Those states are similarly exposed and are definitely feeling the crunch on property insurance, but just not to the same degree that a good majority of Florida is currently experiencing. In Florida, the insurance code is generally structured to be extremely friendly to the consumer, which, I don't complain about that. I want a healthy insurance marketplace where the consumer is getting sufficient protections. I mean, they're the party with
The most to lose, sure.
exactly, and just doesn't have the same leverage that a $1 billion insurance company might be able to bring to the table. So it's not a bad thing. But Florida is unique in the sense that really until the recent insurance reform legislation that came through the State House, it was too easy to bring suit against an insurance company, even in a scenario where I think most people would agree insurance probably shouldn't be cutting the insured a check. If someone has a 20-year-old roof or a 25-year-old roof, right near the expiration of its expected lifespan, and maybe a bad storm rolls through and it blows off 2 shingles, and the remainder of the roof is otherwise in decent shape. There was just a very minor amount of damage done to the roof. Let's say, the insured gets a knock on the door from a roofing contractor, and they say, hey, I can get you a free roof. We just got 10 of your neighbors a free roof over the last month. You figure, sure, why not? I'll entertain it, see what happens. And you file the claim gets denied. The roofer then says, oh, well, we have this great public adjuster we want you to talk to. They'll get it done. So you figure, I have nothing to lose, might as well. And you talk with the public adjuster, they say, oh, the insurance company, they're just trying to rip you off. And what you need to do is talk with this, personal injury attorney that you're super close with, and they'll help you bring suit against the insurance company. The insurance company will agree to settle, and they'll cut you a check. We'll get you a free roof replacement. So you do that. And, you're thinking, this isn't fair. Insurance is such a scam. All my neighbors just got a free roof. Why don't I?
Yeah, there's no doubt. We know of that personal experience of some of these storms coming through that really didn't hit Tampa, and all of a sudden everybody's getting free roofs. There's no damage. Not even, you're being kind to say there's even a few shingles that have come off. That's not even the case with some of these cases that we know of, that the roofer's knocking on the door and encouraging that homeowner to get a new roof. And when everybody does that in the state, we pay for it. Everybody pays for it. And so, you talk about being friendly to the consumer. There's a tipping point where it becomes not friendly to consumer because it's too friendly to the consumer, if that makes sense. And it ends up costing everybody. And that's where we are right now. That's where there's been studies, from what I understand and talking with you, that have shown that a lot of fraud on roof and hurricane damage have been the cause of these rate increases, more so the litigation, more so than the actual storms.
Absolutely.
Kelvin, I have a question to ask you on that. So what you're describing reminded me of personal injury attorneys who sue on slip and fall, and they all work on contingency. Are these attorneys and roofers and everybody working on a contingency basis so that the homeowner has nothing to lose? He sues and then everyone gets paid? Is that how it works?
Correct. The vast majority of the time, these attorneys, the roofing contracting companies, they don't get paid unless you get paid. So the interests are aligned, and it becomes a low or zero risk proposition for the insured to kind of throw spaghetti at the wall and see what sticks, so to say. The reason this is not good for not just the insurance marketplace, but really the people of the state of Florida and investors who are invested in the state of Florida, I think everyone agrees that when a loss happens, that's a covered loss. We want insurance to pay, and we want them to pay without any of the insurance games that the industry is so fondly known for. But I also think that the majority of people would agree that when an unfair loss gets paid because the insurance company is forced to pay, when maybe they probably shouldn't have been forced to pay. If you have a 40-year-old roof, do you really expect the insurance company to come in and replace it with a brand new roof if a little bit of wind comes through and blows a shingle or two off? I don't think that's fair. I think it would be the responsibility of the property owner to maintain their property. And on an individual level, who doesn't want to have a cost like that transferred to another party? I get it. But when everyone is doing this, It goes back to the age-old saying that when everyone gets something for free, nobody gets anything.
That's right. That's what's happening here. It's ridiculous. So, what are some of the other states doing? Louisiana's been a catcher's mitt for storms over the past 10 years.
Yeah, when you look at the path of the storms, most of them go up past Florida off the west coast and head right into Louisiana every time.
Louisiana, Mississippi, Alabama, they get killed. So, what are they doing that's different from what Florida's doing to mitigate some of these costs that are being passed on to the consumer?
So in some of the other Gulf Coast exposed states, they typically have less stringent rebuild requirements. I'm spitballing a little bit, but my understanding is that if around 25% of the property is considered destroyed or damaged following a loss, that is considered a total loss in Florida, meaning a complete rebuild is in order and would then be paid for by insurance. It's not quite as dramatic of a total loss level for other states. If in Michigan 25% of a property is destroyed from a fire, we're not going to tear the building down. We're going to fix the damaged portion, rebuild that particular portion of the building. I agree that, having stringent building codes in place, especially in places like Florida, where these properties can be tested with severe wind, storms, etc., is in everyone's interest. But perhaps we shouldn't be rebuilding a property constructed in 1960, 1970 with like quality but brand new materials simply because there was a partial loss to the property.
Or it's prorated, or there's something, right?
Exactly.
So there's some legislation that was passed recently. I've tried to look at it and read it. It's complicated, and of course I got a million other things to do, and I'm trying to catch up on. It was another one of those legislation that was passed sort of in the middle of the night, and I read about it the next day. So I didn't even know that was happening. It seems to be happening pretty frequently with this legislature in the state, but there's a lot of reasons why I haven't been able to be on top of this like I normally would. But can you give us sort of a 30,000 foot view? And I'm not expecting you to give us minute details, but the legislation that was passed, I want to say in April of this year, what that did to try to mitigate some of these costs that are being passed on to the insurance carrier and henceforth to the consumer.
Give a little background. In Florida, 90% of the bad faith claim lawsuits brought against insurance companies across the United States in Q4 of 2022, 90% of those lawsuits were brought in Florida.
Unbelievable. That's an unbelievable statistic.
Did I say 90%?
90.
90%. So we're just fraudsters. That's just embarrassing. People, be better, for God's sakes.
I understand why an individual would try to bring suit against an insurance company who they rightfully feel is being unfair with their claim settlement. If all of your neighbors just got a free roof and your insurance company denied the claim, that wouldn't feel very fair to me. I might consider bringing a suit in that scenario. The issue with Florida is that really until the recent legislation was pushed through the State House, consumers were almost directly incentivized to bring suit because these cases were taken on contingency. So if they lose, who cares? They aren't out any money. There's no, equal skin in the game, so to speak. If they win, not only does the insurance company pay for the settlement to resolve the lawsuit, they also pay for the legal fees of whoever brought suit against them. That is unique to Florida. They're working to mitigate that factor with some of the recent legislation that's been pushed through, and I think we're taking steps in the right direction. But ultimately, Florida's insurance marketplace has been so hostile to the industry for so long that it has spooked a lot of the kind of core national insurance companies that you see in every other market.
Sure.
I mean, look at State Farm, look at Travelers, Nationwide, just about any Berkshire Hathaway company. They're not in the state for a reason, and they're big, very smart, very well capitalized companies who, they could pay for some hurricane losses if it was profitable business for them.
Sure.
What do you do if you're a business and you're not making a profit in one particular state or region? You increase your prices, or you leave the state because you're not able to operate profitably. And that's where we're now at. I mean, just over the last year, the number of insurance companies who have either pulled out of Florida or completely gone insolvent, went out of business, it's concerning.
I'm going to get on my soapbox here. I was not long ago, I mean, it was when all this was really starting to accelerate in terms of costs. I was at a discussion where I'm not going to name names, but there were some politicos that were at this event that blamed Democrats blocking legislation. Listen, man, the Republicans have had super majorities in this state for a long time. They've been in control for 30 years. And I'm not saying vote Democrat. What I'm saying is don't let them lie to you. So they're either in the pocket of somebody who's benefiting from this or they're ignorant. Either way, make sure that you as a citizen is getting the word out to them that this is not acceptable. And if they don't listen to you and they don't seem to hear or understand, vote them out. If you want to replace them with another Republican, I don't care. But don't let them lie to you and tell you that it's a dog when it's a pig. Because that's sitting at those types of meetings where you get that type of nonsense, it makes my head want to pop. And my first reaction is to want to walk out of the room. But you have to engage them. You have to engage them and make sure that they understand that this is not acceptable behavior.
Absolutely.
And that they need to take corrective measures.
So, Calvin, I have a question to ask you, because what it seems to be the problem you're explaining is supply and demand. We have supply that's diminishing because insurance companies aren't coming here, and of course demand's increasing because of all the things that are going on. But in Florida we have this institution that's really supposed to be the insurer of last resort, Citizens Insurance Company, which is backed by the state. How is that helping? Is that plugging the gap?
Citizens, in theory, serves a very useful purpose. The issue with Florida's implementation of their state-backed insurance company Citizens versus the very similar state-run insurance program in Louisiana. In Florida, Citizens is prohibited by law from increasing their rate more than a certain percentage each year. I think it's around 8 to 10%. In Louisiana, it's the inverse. They are prohibited from being any cheaper than X percent of the next most expensive private industry rate filing. So in Florida, it's ironically kind of a more socialist approach to the property insurance marketplace, in the sense that government is telling a government-backed insurance company, you have to operate at a loss, and it has the unintended effect of making it more challenging for private industry to compete and play in the state. I joke that there is probably only one thing that the governor of Florida and someone like Bernie Sanders might agree on, and it's that they don't really care for the insurance industry. And I get it. I mean, I don't work for Nationwide or Travelers or whoever. Their profit loss statement at the end of the year is irrelevant to me, other than I want them to continue being in business, because the more markets that are available in all of the states that we're active in, the healthier the marketplace will be, the better the outcome will be for all parties involved.
Yeah, no doubt. And you sold an insurance policy, you want to make sure that it gets paid.
Exactly.
And there's nothing's worse than that as an insurance broker, to have to look your client in the eye and tell them that what you sold them is no friggin' good. I mean, those are painful conversations. We've talked about two items, and you said there's multiple reasons why Florida is performing worse than others in the country. And we mentioned hurricanes. We mentioned there's political and legal issues here, and there's structure issues. Actually, we've already talked about more than two. We talked about three. But what are some of the other issues that Florida probably should address to advance the ball on this and make it better for the market and for citizens of the state?
So one of the other key drivers of the drastic pricing swings that we've experienced over the last several years is the dwindling availability of reinsurance. Reinsurance is, to put it simply, insurance for the insurance company you buy insurance from, so that when that hurricane blows through, maybe Nationwide or Travelers or Liberty Mutual or whoever else aren't on the hook for the full $30 billion they might have exposure to. Instead, they retain $5 billion or $10 billion of the loss, and the remainder is transferred to another insurance company. And really, this arrangement allows for more efficient use of capital throughout the entire risk capital stack. If you're a State Farm, do you want to keep $50 billion in extremely liquid reserves? No. You want to put that into a higher performing investment vehicle that may be less liquid. Reinsurance enables that. As the primary insurance company, you need to set aside exorbitant sums of money for every black swan loss event. Because of the increasing scale, scope, and frequency of large catastrophic losses, not just in Florida, not just the U.S. Southeast, but even in large parts of the Midwest, the Western United States with, wildfire risk, reinsurance has been having a very bad time over the last 6 years. I mean, the California wildfires, the 2020 Derecho event that came through Iowa and many other parts of the Midwest. That's another good example. Just all of the hurricanes that came through Florida and the U.S. Southeast over the last year alone. I mean, it becomes colossal sums of money that are paid by reinsurance companies to the primary insurer to indemnify them for their exposure to these catastrophic loss events. And ironically, because interest rates have gone up, that has the unintended consequence of removing capital from some of the riskier investments, like providing catastrophic loss reinsurance cover. So as interest rates have gone up, the amount of capital in the reinsurance marketplace has gone down. So you have the same, if not increasing, exposure to loss each year, but there's fewer dollars available within the reinsurance realm to provide cover for that.
So we've got hurricanes, there's the legal situation, there's the structure, there's reinsurance. What else? Is there anything else that's causing an issue that needs to be addressed?
Those are really most of the key things.
Most of them. Okay.
I could go on a tangent about how contractors and, public adjusters and attorneys are ruining the world for everyone.
You probably wouldn't get much of an argument. All the attorneys that are listening on our podcast need to hold their ears.
Which attorneys?
I don't want to. If you're going to send hate mail, send hate mail to Stephen.
Yeah.
And Calvin Roberts, your email address is what?
Which I have to be fair. The attorneys aren't doing anything wrong for the client that they're serving, the public.
Sure.
They're doing their job.
They're going by the law.
Exactly.
I mean, but it's just amazing that it's the law seems to be working one way in Florida and one way in another in other states. But I have a question to you. So the one practical thing you've told us is you go out and talk to your representatives and tell them to fix things. But what other practical steps can we take as real estate owners and property managers and brokers to mitigate these increasing costs? We have one property. I mean, 2 years ago it was paying $58,000. Last year it was $73,000, and it just went up to $115,000. And I'm told that we're really lucky. And you can't take it to other brokers because apparently all the other brokers, they kind of put a lock on the market when you shop it. So it's not like you can go and shop it around like you're getting quotes from contractors. You sort of have to go down the road you're going. What practical steps? One of the things that we've been talking about, because we manage a bunch of properties, is maybe taking out and pooling all the properties into one insurance pool so that who's ever insuring is well diversified. Are those kinds of things practical, and are there benefits in doing that?
Oh, absolutely.
This is obviously really the only person or persons that are capable of doing that are people that have portfolios, us and maybe, other investors or whatnot. But I'm curious to hear your response to this, Calvin.
So I am a big believer in studying for each client the efficacy of a captive insurance solution. They don't make sense for probably 99.9% of real estate owners. But what a captive is a member-controlled insurance company. So, you feel you're getting a bad deal from whatever insurance company you are currently buying cover from, form your own. And this doesn't make sense for any group that is not very sufficiently at scale. I mean, somewhere between 1,000 and 2,500 doors typically is kind of the floor, depending on which market you're in and what premium you're currently paying. and also what your unique loss experience looks like. If you are extremely diligent and prudent about your risk management and you're thinking, hey, we've paid $2 million in premium over the last 3 years and we've only had 400,000 in claims. Well, you're performing better than industry benchmark. What a captive really allows an insured to do is get into the driver's seat of controlling their insurance program. You're not beholden to the whims and, changing pricing of a third-party insurer. You set your own reserves.
How do the banks feel about this, Calvin?
So if you have bank debt on the properties, you typically have to go through what's called a fronting carrier relationship. So that's where a larger A-rated, well-capitalized insurance company puts up the paper. So they allow you to use their insurance paper, their licensing and credentials, and then your captive effectively reinsures the fronting carrier. So you indemnify them for the losses, make them whole. That allows you to comply with, agency debt, just about any other bank imposed requirement for the financing and, insurance guidelines thereof. But there is no true silver bullet. Another approach I like to take on some of the smaller accounts who maybe just don't fit into a captive program. You have 500 doors, you're getting the scale, but it's just not to the point where it makes sense to put $2 million of your own capital into reserve to form an insurance company to provide your own cover. There's a approach called a risk purchasing group. So that is, we usually liken them to programs within the industry. So what's a good example? Southwest Real Estate Purchasing Group, that's one that I've run against recently. Bolton Street, they have a risk purchasing group. I think it's on mostly Cincinnati paper. Instead of rating off of the general benchmarks for that industry classification, they're rating based on the unique loss experience of the members of that risk purchasing group. So if you're in an RPG where the underwriting has been tight, the losses are much better than industry benchmark, you're going to pay a premium that is lesser than what some of your peers buying insurance from a more conventional approach might pay. RPGs can make a lot of sense in more situations than a captive approach. Captives are pretty exclusively for the big boys. It doesn't seem to fit in for anyone who's paying realistically any less than $1 million in premium every year, simply because you need to have well enough capitalized reserves to account for those losses, or you need to have enough reinsurance to where you can get away with having smaller reserves.
Sure.
But then at that point, if you don't have that premium volume, you'll likely end up paying more money than if you had just bought insurance through a more conventional approach.
Sure. Calvin, good stuff. I mean, obviously, this is one of the hot topics, hot buttons going on in Florida real estate right now. Insurance, sales tax. There's some foreign buyers issues that are going on right now that have people's a little hot under the collar. But this is probably the hottest of the hot things. And so we really appreciate you coming on and chatting with us about this today. Folks want to get in touch with you to talk about some of your programs. How would they go about doing that?
Email, phone call, Facebook, LinkedIn, carrier pigeon, smoke signal. I'm at my desk.
So can you give the address of your carrier pigeon, or if you don't have that handy, just your email, and phone number so people can contact you?
That would be Kelvin, spelled like Kelvin Klein, CALV Victor I N Nancy, at falconinsAgency.com, or via phone at 734-887-9110.
Awesome. Calvin, really appreciate your time today. Anything else you want our listeners to know before we let you go?
One quick talking point that it's kind of the same approach as you can't save your way out of not having sufficient income if you're trying to build, savings to eventually start buying real estate as an investment vehicle. One of the more practical solutions to mitigating the increasing cost just about every year for property insurance is to monetize the insurance vertical completely. You can provide tenant legal liability cover, which is very similar to renter's insurance, but is legally distinct as a product from renter's insurance. Really, this is protecting you, the landlord, and property owner's interest in the property from accidental, negligent tenant losses. They fall asleep with a pizza in the oven and cause a $80,000 fire. You can, through an insurance broker, provide that cover. And if maybe you're not at massive scale, maybe below 1,000 doors, you can charge a management fee on top of your cost and pass all of this along to the tenant. I have one program where it's 3,200 doors in Michigan and Ohio. Their cost is approximately $10.50 per door per month, all in. They in turn charge the tenant $14 per door per month, and they are contractually guaranteed the right to provide this force-placed coverage at the tenant's expense as part of their tenant lease agreement. So you multiply $350 per door per month by over 3,000 doors, it becomes a solid revenue stream very quickly with almost no added administrative work for your organization.
Is that property casualty or is it also liability?
So it would be a property and casualty product, but it would be solely a liability line because it's not really a property coverage. It's the tenant's liability due to the accidental negligent covered loss to your property.
Stephen, we might have to talk with Calvin about this offline because we have chronic issues with liability not being paid by our tenants.
Maybe it should be a separate discussion. We could do a whole. That's an important topic.
Yeah, it is an important topic. It really is. From a commercial standpoint, we require them to have liability insurance, and if they don't want to pay it, what do? You can't just go to another carrier and say, "Well, this guy didn't pay. Let me get a coverage for him and at 4 times his regular rate." And force coverage, you can't do it. So it creates a dilemma for us. They're in default of their lease agreement at that point, and we can enter into eviction. But it could take. First of all, sometimes it's not always necessarily a bad tenant. You get a lot of these folks that are just like, I don't like liability, so I don't want to pay for that crap. And then you're fighting with somebody who ordinarily is paying, and you don't want to do that. So that's definitely something. I know we got to let him go today, but that's something we got to talk about.
Yeah. Okay.
Calvin, appreciate it, sir.
Likewise. Thank you very much for having me.
Thanks, Calvin. That was great. Yeah.
All right. Take care. And that was Calvin Roberts talking insurance. We got a big problem, Stephen, but it can be fixed.
So it can be fixed, but it can't be the kind of problem that people say, oh, it's not in my backyard. It's in my backyard, but it's somebody else's problem. As we were talking, and I was thinking about all these huge increases we had in insurance this year, I was thinking of some of the landlords who still have gross leases, and they're absorbing all of it.
And when you say gross lease, why don't you explain to people what a gross lease is?
So when you have a gross lease, you only pay the lease amount plus, in Florida, you pay a sales tax. And when you have a triple net lease, you'll pay a base rate, and then you'll pay a proportionate share of the expenses of the insurance and the real estate taxes. And so that is a way for the landlord to pass the costs on to the tenants. And it's not great for the tenants either, but landlords who are stuck in gross leases have no ways of passing on those costs. And by the way, I just looked at a lease the other day. The tenant had renewal options into 2045. And that's incredible.
So on a gross lease? So the landlord is having to absorb all those increase in costs?
It's a net lease with caps on the CAM increases.
And typically, not typically, but frequently what you'll see is that there'll be what's controllable versus non-controllable. Was there any language about that? In other words, controllable being items like property management, you can control those expenses, but uncontrollable are things like insurance and taxes. That's a third party who controls that. Were there any clauses in there that allowed for controllable versus non-controllable increases?
So there are a few tenants in this plaza. I did see controllable on one of the leases, but it's not consistent leases. And, different attorneys negotiate different things. I didn't see it on one of the others. It's got this really long renewable term.
Ouch. We've had basically generational increases in inflation and generational increases in insurance costs. And if you're locked into a long term, oh, goodness gracious, that's the type of thing that's going to seriously affect your bottom line, if not put you out of business. And so these are things we definitely got to pay attention to when we're landlord and brokers too, to make sure that it's fair to all parties involved. Stephen, really enjoyed Calvin's discussion. It's been a long time coming. We've got some major issues that are going on right now in our state that need to be addressed. This is one of them.
So, Eric, just mentioning that, and the reason why Calvin was such a good guest is because if we speak to someone who's just local in Florida, it's, hey, this is what the market, there's not much we can do about it. But Calvin's got a little bit of a different perspective because he's covering several different markets. He looks across the country and can see what we're doing wrong in Florida. And we do need to do something. It cannot go on like this.
Yeah, and I mean, come on. Louisiana, are you kidding me? Like, Louisiana has the same hurricane issues we do, if not worse.
I think worse. Every time I look at the cone going up, it gets from Cuba, bypasses Florida, and goes right into Louisiana.
Into an area that's below sea level. And so they get, flooded, they just get crushed. And so they handled their problems. We should be able to handle ours. And, I made the comment before, I don't want Republicans sending me hate mail. I don't care, Republican, Democrat, I don't care who you vote for. The fact of the matter is that Republicans have controlled the state for 30 years. Send a letter, have a conversation with your political leaders that are in your district. Tell them to fix this problem. Tell them what the problem is. They might not know. This is your job, citizen, to help spread that word and get the bandwagon rolling. But I don't care who you vote for. But if you're not getting satisfaction from the current Republican that's serving you, then vote another Republican in that understands the problem. That's going to vote in your favor. It can be fixed. So, no hate mail. The only hate mail I want to see is hate mail of Stephen.
Well, let me just go on, expand upon that. We at the Florida Gulf Coast.
What, hate mail?
No, I want to talk about how you can fix a problem, or you can at least try on sales tax. We had sales tax going up every year. The Florida Gulf Coast Commercial Association of Realtors and other entities got behind it, and the sales tax has been going down every year. It's not ideal. We still have it, but it's going in the right direction at least.
Yes, sales tax on commercial property, which people need to understand. On commercial property in the state of Florida, the state and municipalities charge sales tax. It's pretty unusual. It doesn't happen in many other places around the country. Florida charges sales tax. And so, it's a regressive tax. Small businesses tend to get hit worse than larger companies, but certainly the more valuable real estate that you retain, that you hold, those are the larger tax that you're going to end up paying.
Right. So
that's been addressed. The state is dropping the numbers, and that's because the FICAR and other interests lobbied for that.
And lobbied hard. It was hard, but we made our voices heard. And you know what? We have to do it again. We have to, everyone, the benefit of the show is that everyone, it's an audience, and we can try to make things happen.
Yeah. You're responsible. It's your government. You can complain all you want about them, their, or they, whatever pronoun you want to use. It's you. And you can have an impact. You just got to participate. You got to learn things that are affecting you directly, learn the facts, and then write letters and make telephone calls and organize to make sure that they hear you properly, because many times they don't. They have their own agendas. Stephen, Calvin was giving us an update with something on the insurance that has long been coming. He was a great guest. How about other great guests? Where can people find them?
So the place to go always is to our website, www.investfloridashow.com. You'll find other great guests, but also you can download the app and listen to the podcast while you're mobile.
Guys, as always, we appreciate the time that you invest with us each and every episode. And until next time, hasta la vista.
You've just listened to the Invest Florida podcast with Eric Odom and Stephen Silverman. Join us every week for actionable real estate investment ideas, and of course, visit our website at www.investfloridashow.com for more shows and tips on how to earn a cash flow in the real estate market in Florida. While hosts and producers of the Invest Florida show have no reason to doubt the validity of comments of our guests, we do not warranty their accuracy. Please check with your legal, financial, and tax advisors before entering into any investment. Returns will vary from person to person and deal to deal based on unique circumstances. All information expressed in this show is for educational purposes only. Opinions of the guests are not necessarily shared by the hosts and producers of the Invest Florida show.